Silver, copper, as you see it, even gold, as I mentioned earlier, getting hit very hard today amid the global de-risking, of course, worries about recession. No one better to discuss this sell-off. Legendary global investor Jim Rogers. He's chairman and CEO of Rogers Holdings, also author of A Gift to My Children. And he joins us this time from Salzburg, Austria, as opposed to Paris, France. Yes, it is nice to be Mr. Rogers. Jim, let's get right to it in commodities. You know, why the sell-off and what are your expectations?
Well, David, everything is being killed right now, as you can see. Partly, as you may know, Brazil has sort of ignited a trade war. They put on big tariffs with the people in Asia, and right now China's trying to get the Europeans to let them open up the trade with China more, and the Europeans are saying no, so China's saying no, we won't bail you out. So there are all sorts of trade tensions developing and currency tensions developing. It's not a good world. No,
it's not a good world. And, you know, interesting you bring up Brazil. Of course, Brian Sullivan earlier mentioned the real. What's the takeaway here in terms of the so-called trade war that you just mentioned? How important ultimately is that going to become?
Well, I hope the trade war doesn't break out. You know, throughout history, when you've had trade wars, it's caused depressions. You saw what happened in the 1930s. It led to depression and ultimately led to war. So I hope it can be contained. I was very surprised to see Brazil do that. One of their largest trading partners is China, and yet they suddenly, and Korea, and yet they suddenly hit China and Korea with 30% tariff increases, which is not fun.
No, and the real, of course, is down sharply as well. You know, in terms of currencies here, we're also seeing a backup almost across the board, except, of course, for the U.S. dollar. Last time you were with us, you talked about the dollar perhaps being a short-term buy. You still think so?
Well, I own the dollar, as we talked last time, and I think the dollar's going to go higher. At least I hope it is. That's why I own it. Against the major currencies, it's going up against the real, it's going up against the euro, it's going up against everything right now. There are various reasons for that, one of which is everybody's panicked, and for some reason they're rushing into the U.S. dollar. Now, the U.S. dollar is not a safe haven, if you ask me, but I do own it.
Well, Jim, that's what I wanted to ask you. By the way, you're not running up a flight of stairs. It sounded like you just ran up a flight of stairs. You're okay, right?
Yeah, no, I had to run over and turn off my TV and turn off my computer. I had to turn off all kinds of things.
All right,
because it was interfering with the broadcast.
So there's so many viewers that want to find a safe haven right now. If you wanted to park some money and you just wanted to be safe, what would you do right now?
Well, right now I would own either the U.S. dollar or the Swiss franc if I were putting new money to work, or agriculture. Agricultural prices are getting banged right now. I'm contemplating buying Swiss francs, more dollars, and agriculture.
You know, we're looking at the losses in copper today, Jim. Of course, concern about the Chinese economy. You know, do you share that concern, or is this overdone today?
Well, China's been trying to cool its economy off for a couple of years, David. They've raised interest rates 6 times. They've raised reserve requirements a dozen times. They're doing their best to cool things off, and so no, they want to cool it off. I expect them to continue to do it, and that is causing more slowdown around the world. But the major problems are coming from the West. They're coming from Europe and the U.S. You know, we're much worse off than we were in 2008 because the debt has gone through the roof since 2008.
You think
at government levels, at least in 2008, there was the possibility that governments could bail us out.
Right.
Now, of course, the governments have gotten deep into debt themselves.
Right. Of course, we moved a lot of the debt from private hands to public hands, as you say. But, I mean, worse off than 2008 here in the States, or are you talking largely about Europe when you say that, Jim?
About the U.S., too, David. The U.S. government quadrupled its debt in that period of time when you take into consideration the thing which the off-balance sheet guarantees which they've done. You know, they took Fannie Mae and Freddie Mac's off-balance sheet derivatives positions. Those are trillions of dollars. No, the U.S. government is in much worse shape. Everybody's in much worse shape. All governments around the world. And, you know, pension plans are getting killed with low interest rates, very low interest rates. Pension plans have to be funded by somebody, so companies are funding them. States and municipalities have to fund them even more. I mean, this idea of Bernanke's interest rates, low interest rates are good.
Yeah.
He's killing the people who save and invest, and that's
Jim,
really hurting a very, very, very large part of the population.
Yeah, Jim, we tried to make that point earlier in the program. Let me ask you about Europe and the banks there, because you're there. You hear what the banks say. They don't need capital. The market says they do need capital. You've got a good feel on this. What's your read about the European banking system and the need for capital?
it does need capital. Like they've got all these Greek bonds, they've got all these Irish bonds, they've got all these pigs bonds, as they're called now. No, they all need capital. The only solution that will work is if they can all gather in a room and say, okay, we're going to have to write off loans, we're going to have to take big losses. You, whatever bank X, you're going to suffer, but we're going to put a ring fence around all of you. We will support all of you to keep the system alive so that people can take money out of the bank so checks can clear, etc. But there are going to be huge losses taken. If they don't do it now, if the market makes them do it in a year or two, David, Gary, then it's going to be uncontrolled chaos. Right now, you could have controlled default if you did it now. If you don't, if you wait a while, it's going to be uncontrolled default.
Right. Jim Rogers, as always, very good to have you and have your insights. Jim Rogers joining us from Salzburg, Austria.
It's amazing to me how many smart people, really smart people that you and I chat with, who say the same thing. And it's day after day, David, after day, that they just don't try to put this to a head.
And that being Europe, of
course,
is what you're talking about. I've shared this as well. I mean, we had Tony James yesterday, Neil Kashkari the day previous. There is a belief, ultimately, Gary, that you will have a Greek default, but it will be contained because Europe will get its act together. They will recapitalize the banks in some way, and you will therefore forestall any systemic failure of the financial system over there. But yet, each day that goes by, when you have days like today, of course, especially, it can be really damaging.
It is. These things feed on themselves. You and I both know it. Yep. We had how many conversations in 2008 when we would chat with each other, David, and we just could not believe some of the things these banks were saying based on things you and I were hearing from those that were buying credit insurance. I want to continue to believe this is not going to be like 2008. I want to continue to believe, like you do, that things won't be that bad. But when you look at the mess over in the European continent, and you think back, this started in February of 2010 over there. It just, I don't have any hair, but I would sort of scratch my hair if I had.
It's our own financials. You've seen the close in the European markets. The financials there certainly taking a beating yet again. Our own financials also not doing well at all. Bank of America off 4%. Get this, Morgan Stanley is down almost 9%. On absolutely no news.
Jim Rogers had mentioned about the U.S. dollar. Not loving it, but obviously looking at it as the safe haven. I don't know if we could bring up a 1 or 2 year chart of the dollar here. You're now at sort of a very significant technical level in terms of what's happening with the dollar. You always like to think about somebody's got to be getting hurt here. You got to believe there's a number of global macro hedge funds that are just going to suffer a tremendous amount of pain as to what's happened here.
Take a look at that dollar.
Yeah, look at that.
We're going to send you to break now as well. We've got the S&P down 3.4% at 1126.60. All right, up next, Ben Bernanke and the Fed seemingly running out of ideas. Who else is left to help lift the U.S. economy, not to mention the rest of the world? We'll ask a former White House economic advisor when we come back.